When we talk about what's really powering the AI revolution, your mind probably jumps straight to those incredibly expensive, flashy GPUs, right? The chips, the algorithms, the massive data centers. But what if I told you that all of that cutting-edge tech is entirely dependent on something way more fundamental? Something that doesn't usually make the magazine covers, but is literally the absolute critical bottleneck for the future of AI. I'm talking about the raw, physical power infrastructure required just to keep those chips running without, completely melting down.
Welcome to this explainer. Today, we're unpacking the incredible story of Monolithic Power Systems, or MPWR. These guys are the indispensable behind-the-scenes engine that's actually running the massive tech brands we all know and love. We're going to explore exactly how they've positioned themselves as the ultimate picks and shovels play in this huge AI gold rush, and why institutional investors have been quietly pouring absolute boatloads of money into their stock. Let's get into it.
So here's our roadmap for today. We'll kick things off with the AI power bottleneck, then look at data centers and NVIDIA, and then pivot to electric vehicles and automotive. After that, we'll break down their record Q1 2026 financials, tackle that premium valuation debate everyone's talking about, and wrap up with catalysts and competition.
Okay, Section 1, the AI power bottleneck.
To really grasp the stakes here, check out this projection from Goldman Sachs. They're expecting global data center power demand to spike by an insane 165% by the year 2030. And AI alone, that's going to eat up over 40% of that total. High-performance AI computing generates just a massive amount of heat and requires incredibly precise voltage to operate. Every single watt you can save in conversion means lower operating costs and far better thermal management. So highly efficient power management isn't just some nice-to-have feature anymore, it's an absolute necessity to stop these data centers from becoming completely unviable.
And this, right here, is exactly where Monolithic Power Systems steps up to the plate. Their secret weapon is their proprietary BCD process technology. Because they're a fabless company, they focus entirely on designing these highly integrated power management solutions that allow for significantly higher current density and much better efficiency. Essentially, they are solving the AI power bottleneck by squeezing more usable power into smaller, much cooler packages. It's really impressive stuff.
Moving right along to Section 2, data centers and NVIDIA. We're looking at a massive 50% or even more projected growth in their enterprise data segment for 2026. And honestly, this is the main engine driving MPWR's current valuation. But here's the kicker. This isn't just some hopeful, pie-in-the-sky guess. It's a stated target backed by a book-to-bill ratio well above 1, with an order backlog that already extends deep into the second and third quarters of 2026.
So you might be wondering, where exactly is that 50% growth coming from? Well, it's largely coming from their deepening AI integration with absolute industry titans. MPWR is actually expected to capture roughly a 70% market share in NVIDIA's upcoming Vera Rubin GPU platforms. Analysts are estimating that this deep integration alone could add over $100 million to their 2026 revenue estimates. But the absolute most crucial part here? MPWR is transitioning its entire business model. They're moving away from just being a discrete silicon-only chip supplier and evolving into a full-service solution company offering integrated system-level power platforms. For us, that translates to higher margins and much stickier customer relationships.
Which brings us to Section 3, electric vehicles and automotive. Now, what's really fascinating is how MPWR's technology serves as this brilliant, crucial hedge against any potential volatility in the AI market. Their auto revenue just exploded, growing a staggering 43% in 2025. They're deeply penetrating the whole EV transition by providing advanced 48-volt systems and developing these cutting-edge 800-volt battery architectures. On top of that, their MP-Safe product line is fully ISO 26262 safety certified. That means top manufacturers trust them to power hypercritical systems like advanced driver assistance systems, smart cockpits, and next-gen vehicle networking. They are literally making cars smarter and way more efficient from the inside out.
Let's look at the numbers in Section 4, Record Q1 2026 Financials. Simply put, MPWR is a company executing flawlessly right now. In Q1 2026, their revenue hit a record $804.2 million. That's a massive 26.1% year-over-year spike, and get this, it marks their 14th consecutive year of growth,
14 years. At the same time, their non-GAAP gross margin stayed incredibly healthy and perfectly stable at 55.5%, which basically proves they have the pricing power to maintain strict profitability even as they scale up. And you can see that flow straight to the bottom line, with non-GAAP net income surging nearly 30% to over $251 million.
Crucially, if we look at the breakdown, those revenue streams are highly diversified. Yes, enterprise data is their largest segment at 32.7% of total revenue, and remember, that specific segment is growing at a mind-bending 97.7% year over year. But they absolutely aren't a one-trick pony. Storage and computing, automotive, and communications all make up really solid double-digit slices of the pie. In fact, their communications segment grew 33% just from the previous quarter alone, heavily driven by optical modules and switches.
All right, Section 5, the premium valuation debate. Let's talk price. If you want to own a piece of MPWR, you are going to pay a hefty premium for it. The stock is currently trading at a price-to-earnings ratio of 85.86. Now compare that to the broader U.S. semiconductor industry average, which is sitting at around 42.3. It's also trading at a price-to-sales ratio of over 18. This setup creates what analysts like to call an intense execution versus valuation tension. Essentially, the market has already priced in an enormous amount of future success. That means MPWR has to operate basically perfectly just to justify where its stock price is right now.
And yet, despite that sky-high multiple, the big money is still pouring in. Institutional buying has driven the stock up 221% since unusual volume inflows were first tracked starting back in 2023. Wall Street also remains remarkably bullish. Out of all the analysts covering the stock, 22 of them maintain a buy consensus with a median price target of $1,300. Some firms, like KeyBank, have even issued targets as high as $2,000. They are clearly looking way past the current multiples, betting the house on that forward-looking 50% data center growth we talked about.
Let's wrap things up with Section 6, Catalysts and Competition.
Now, obviously, MPWR does not operate in a vacuum, and we need a bit of a reality check. In the automotive space, they're facing incredibly stiff competition from heavyweights like Analog Devices and Microchip Technology, who are both aggressively expanding their EV and connected vehicle portfolios. And in that all-important AI space, rivals are fighting tooth and nail for market share. Infineon, for example, is actually projected to secure a massive 60 to 70% share in power management for NVIDIA's Blackwell architecture. Plus, you have Renesas gaining meaningful traction in digital power solutions. Add in the ever-present geopolitical risks and supply chain volatility that's just baked into the semiconductor industry, and it's easy to see why any potential order cuts or loss of market share could brutally punish a stock carrying an 85 PE ratio. So this all brings us to our final thought. Monolithic Power Systems has definitively proven that it's a critical enabler of the tech shaping our entire future, with stellar financials and completely unparalleled proprietary technology. But the bar for success has been set incredibly high by the market. Can their strategic shift to a full system solutions provider and their flawless execution outpace that premium price tag? Are they the ultimate long-term play, or does this ultra-rich valuation leave just a little too little room for error? That's the billion-dollar question you'll have to answer for yourself. Thanks so much for joining me for this explainer, and keep learning.